Thanks, Orla. So the last two pieces of legislation from today's webinar. So firstly, I suppose I'll be covering the two closely connected pieces of legislation: the Corporate Sustainability Reporting Directive, the CSRD, much publicised recently, and the EU Taxonomy. So both of these are cornerstones of the EU sustainability agenda, and have been reshaping and are reshaping how companies report and act on ESG matters. So firstly, the CSRD first came into force and applies from the 1st of January 2024. The first wave of reports have already been published and are being published, covering the 2024 financial year. It builds on the non-financial reporting directive, but unlike the NFRD, which applied to a smaller group of companies, the CSRD broadens the scope and increases the level of detail required by companies subject to its reporting requirements. This is all about transparency being the underlying principle behind the directive. So the key objective is to make sustainability information as important and as reliable as financial information. This includes detailed disclosures on environmental, social, and governance matters, so everything from greenhouse gas emissions and biodiversity to labour practices and governance structures. So this implementation is being phased in. Initially, the CSRD applied to large public interest companies with 500 plus employees and either 50 million euro revenue or 25 million euro in assets. As originally drafted, the CSRD will expand to other large companies, listed small and medium enterprises, and non-EU companies that generate substantial business within the EU. The words "as originally drafted" are important here. Of course, as the CSRD is currently subject to ongoing negotiations about defining the scope and the implication of the directive, the EU omnibus discussions. So again, we're keeping a close eye on developments as they play out. There's new information and new updates every week with this, so it's an important one to keep an eye on. And again, keep an eye on our socials, and we keep our clients informed about updates related to this regulatory space. So the implications, like I mentioned, disclosures on ESG matters. When it comes to non-compliance, as Orla mentioned, the penalties are determined by each EU member state. In Ireland, for example, the current regime is that penalties mirror those for financial reporting. So this can include fines and restrictions or disqualifications of company directors. So it's a serious issue. It's not just a reporting exercise. It's a governance issue. Yeah. So just again, a real important one to keep an eye on. Moving on to the EU taxonomy, it's a different kind of instrument to the CSRD, but similarly critical. Rather than being a reporting directive, it's a classification system. So the phase-in application, so it has applied from the 1st of January 2022 for climate change mitigation and adaptation. The elements relating to water, circular economy, pollution, and biodiversity are yet to be applied. So the taxonomy defines what counts as an environmentally sustainable economic activity. The aim of this is to redirect capital flows into genuinely sustainable activities and to help the EU to transition to a low carbon economy. It's really important because it ensures that when companies and investors can say something is green, that there's a scientific and legal definition within the taxonomy to back it up. The regulation entered into force in July 2021, but applied from the 1st of January 2022. So who does this apply to? Firstly, companies that are already in scope of the CSRD, they need to report how much of their activities align with taxonomy. Secondly, it applies to financial market participants under the Sustainable Finance Disclosure Regulation. And finally, it applies to EU institutions and member states when they're setting labels or standards for green financial products. The taxonomy regulation doesn't carry direct penalties on its own. Instead, it's enforced through related regulations such as the CSRD and SFDR. It means that non-compliance can lead to regulatory scrutiny, reputational damage, and investor pressure, especially if disclosures are seen as incomplete or misleading. So even without specific fines in the regulation itself, the indirect consequences can be significant, so it's a hugely important piece of regulation for companies. To summarize, the CSRD tells companies what they need to report when it comes to ESG performance. The taxonomy tells them what counts as a genuine sustainable economic activity. So together, these two reporting directives and regulations are driving a fundamental shift in how sustainability is defined and practiced by companies within the European Union, and for companies outside the European Union who have business operations meeting a certain threshold within the EU. It really is changing the EU business landscape. And if you have any questions, or if you want to discuss these further, please reach out to our team and we'll get back to you and go through it in further detail.